With that, we move on to the second trialogue of the day, titled the InsurTech Forum, Building for the New Normal. And it's my privilege to first welcome and introduce the members of this trialogue. S.K.Sethi, founder and Chief Executive Officer, Insurance Foundation of India, and Vishwanath Ramarao, Chief Technology and Product Officer, ACKO. We have a very experienced moderator with us. That's Joydeep Roy, Global Health Insurance Leader and India Insurance Practice Leader, Partner, PwC India. So without further ado, I'm going to hand over the floor right away to Joydeep. Joydeep, the virtual floor is all yours.
Thank you, Ivan, and good afternoon to everyone. It is always wonderful to be in these ET forums because this is where the cutting-edge discussions happen. And even if we can just take one or two of the ideas or notions which are discussed here and take it to execution, I think the industry is in great hands. So our topic today is to look at the InsurTech impact as well as what lies in the new normal. Well, we have been talking about this new normal for a very, very long time. Last 10 to 15 years, we have all heard that we are living in a VUCA world. It's totally unpredictable, completely full of ambiguity, and this is where the imaginative and the creative really win the laurels. However, throughout these 15 years, and I presume for the next 15 years, where maybe change or the speed of change will be even more accelerated, I think one thing which is going to remain pretty much steady and common, which is the customer expectations, and that is to do with customers all the time will keep wanting things to be faster, better, and cheaper. Now, whether it's technology or human ingenuity or figuring out business models, we have to deliver it to the customers. Otherwise, businesses will face resistance. So we have a very interesting and eclectic fireside chat panels, and I would like to take advantage of that. So on the one hand, we have got Vishwanath, and Vishwanath has a very rich background, not only in technology, but also and within technology. If you look at his specializations, last decade also has been in messaging, in cloud, in security, things which are really the buzzwords today. And today also he is part of the InsurTech ACKO, which is disrupting the way insurance has been done in India. On the other hand, we have Mr. Sethi, who's a very experienced hand, who has lived insurance through and through, and he is not only, he has got an insurance broking company through which he has a direct first-hand understanding of how corporate and commercial business is changing, and that's also changing. Normally, we associate retail business change, but also, through the Insurance Foundation of India, which is founded, he has a wider view. So I'll start with Mr. Sethi first. Mr. Sethi, welcome, and you've seen it all, and you've seen the changes, and you're probably going to see a lot more changes in the next decade. So, how do you think the policy contours of corporate India are changing? And do you see more emphasis on the things that were not covered earlier, like liability, like cyber? And are people going ahead and really covering themselves with the sort of the new insurance covers, or are they not? And how do you think it's going to evolve in the next 4 or 5 years?
See, my viewpoint is that while we comment on the corporates, that the approach of the insurance companies itself is very, very narrow. They do not want to push these new products in the manner in which these should be pushed. Our interaction with many of these companies is that a junior person is made responsible for these new products and the product is just lost. Title insurance. We wanted to organize a seminar on this in Insurance Foundation of India, and none of the person was interested in participating in the seminar itself from these companies. So it is that corporates are always resistant to the facts that they are having some targets in front of them, and the Indian manufacturing industry is always having raw materials and power as one of the biggest costs. So they give focus to that. So when it comes to going to them with new products, whether it is cyber insurance, whether it is liability insurance, whether it is product liability insurance, that there is a high degree of resistance to it, and people do not want to appreciate even that. In the liability insurance, we also come across trade credit insurance. Now, when they are exporting the goods and the bank under pre-shipment credit puts condition that you will have ECGC cover, then companies are ready to take that policy. But when it comes to domestic customers, then they are not at all interested in considering trade credit insurance. And here we say, when Jet Airways went down, when Hayat Regency near Sahar Airport and shut down their operations, how many thousands or hundreds of vendors lost their money in that? No one is talking about it. Jet Airways, 22,000 employees were having protests, and then people were thinking, oh, employees have lost. But no one talked about vendors, corporates who lost money in this transaction where Jet Airways was down. So coming to the point is that while corporates will be always having resistance in considering these products, more push emphasis has to be done by the insurance companies in popularizing these products, giving importance so that their distribution channels, their senior management gives emphasis to these. And as a result of that, the portfolio comprising of cyber, liability, product liability, trade credit insurance, title insurance, that this goes up in the coming months or years.
Thank you, Mr. Sethi. I think that's quite illuminating. So what you're saying is that since these are new, the responsibility of the owners falls upon the insurance companies to popularize and also to give comfort to everyone. And absolutely. And I think it is extremely important that these, which form typically the foundation of a developed economy, services and liabilities, product liability, and these are important because otherwise, suddenly the floor falls below the industry. And in fact, even sureties, mortgage guarantees, there are so many different areas where India is trying to expand in its GDP, but the cover for risk is low. Absolutely, and I'll come back to you further on this. So, Vish, if we think of get into the technology side of how it is really marching ahead and consumer engagement. So, from your experience, from a technology point of view as well as from being in a company which is trying to disrupt the market, how do you see the whole future of consumer engagement? How do you really engage people to think about insurance first, which normally is not the case, so that people, there's a pool created, and get them also engaged to understand what they need to buy and what they're buying? Your thoughts, please.
Yeah. Joydeep, first of all, thank you for having me in the fireside chat. I appreciate the opportunity. I'm excited to be here. For us, unlike in corporate, when we think of our consumers, we have a real opportunity to really get close to them. We have a real opportunity today with technology to understand their lives and their needs much, much better. And when we employ those types of data tools and insight tools and are able to get close to our customers, we're able to realize that end of the day, it's very difficult to push a product that people don't want. You have to be able to build products in a customized way. You have to be able to segment them for particular groups of people in order for that to be appealing to them. And that's the power of technology, and that's the power of direct relationships, right? And so that's where we are as ACKO, really trying to innovate and trying to build for the customer, simplifying things and building it in a way that it has a high degree of relevance in their lives. For example, in healthcare, if you spend a little bit of time in healthcare, you will quickly realize that people oftentimes buy healthcare plans they don't completely understand. And when that happens, eventually, when you go for a claim, people have a very different expectation of how the product was supposed to support them. So you have to do one of two things. Either you have to explain your plan really well so that people can choose those plans appropriately, or you have to allow people to plans that are meaningful to them, right? So the user participates in the purchase process. This is no longer a way for us to push to the consumer something that they don't want, but they are co-opting into that choice. And so that's the power of technology, and that's the new normal that we are seeing. That, you know, during the pandemic, we saw a significant shift to digital preference. People want to engage with you digitally, and digital channels allow you significant advantages in being able to communicate directly with your customer. So that's how we are approaching it. We're looking at this mainly from a customer-centric perspective, and we're trying to really build plans and products that matter to people in their daily lives and that we can truly support them.
An interesting point which came out clearly, Vish, is that you are trying to align with what people do in their daily life. So instead of, let's say, trying to make them think about insurance as something separate they need to do, you're basically trying to build in and sort of fall in with what they do and be with them with insurance as a supporter. Very interesting. I think that's typically the way I think the engagement can be much higher, because insurance does not fall within the top 10 things that we wake up thinking about, right? Or to whatever we have to buy. I mean, right from basic staples to luxury goods or to holidays or any services that we take, that obviously comes low. So I think that's the kind of approach which will make insurance more invisible, but in everyday life. So good luck with that, and we will come back with another point on that if we have time in the third round. But let me get to the second round and of questions. So, Mr. Sethi, corporate India has always been much less insured. Though they are insured, they're much less insured than, let's say, if I take a developed economy, let's say the Singapore counterparts or our UK counterparts. Somewhere the attitude towards insurance has been more of an expenditure. How do you see that changing, and do you see it changing at all, or do you see companies viewing insurance just as an expense item which needs to be done? Because one thing you said earlier, that wherever there was a stipulation, like, for trade, people went ahead and did that. So there is obviously a mandatory nature where people go for, be with loans, hypothecation, or if it is with, contracts, bidding, etc. But do you see corporate India looking at, and I will include SMEs also in them, if you have time to say that, can look at insurance as an integral part of business risk management and investment to make sure their business runs well, right at the very top?
1st of January 2007 was when de-tariffing was done in India. As a result of that, in property insurance, the competition resulted in discounting to start. And in recent years, we have come across where the insurance of the property has been done with 100% discount, and the insurer has been satisfied with earthquake and terrorism insurance premium. As a result of that, what happened is that prior to 2007, the senior management, CEO, managing director, they used to take little interest in insurance, not very much even at that time. But when the discounting started, then it is that this became a ball game of only the accounts person or the insurance person or the CFO, that what lowest quotation he can get. And CEOs and MDs were not even talking about insurance. And as a result of that, it lost importance. They were out of touch with the insurance companies, with insurance intermediaries and all that thing. And it was practically impossible for anyone. We are also insurance brokerage firm, that no time is given, because there was a insurance cost had gone down from 2007 to, let us say, 2019. Now, when GIC took the stand and they brought back some that this cannot be done, no discounting is to be done for certain engineering property things and all that thing. Now it is again that now we get calls from the managing directors and all that thing. That is now they are taking interest. But coming to example of cyber insurance. Cyber insurance is such a product which in one of the conference in Mumbai, I was very satisfied to hear from them that this product should not be bought by one person sitting, whether he's insurance manager, but it should be bought by a committee comprising of IT head, information security officer, CFO, CEO, and of course a lawyer. That is, they should understand that what is covered in cyber insurance and what is not covered. As a result of that, it is that what we are finding is that this thing is missing in the case of corporate India. They do not have a risk management committee in place within the company, and it is not there because Ministry of Corporate Affairs or SEBI guidelines do not need that thing. So as the companies are being run by their own processes and systems, there is no such committee. As a result of that, any insurance intermediary trying to reach these corporates for selling cyber insurance gets lost in these 5-6 different persons who are sitting in their own chambers, and they do not have time to meet because they are of course very busy. Anyone who is senior person is very busy. So this is what is there is that no one is a export managers. That is, when one has to tell them about the product liability, which is very important when one is exporting to countries like USA. You and we know that Chyawanprash is banned in many of those countries like USA, Canada, because it is having high lead content. So product liability cover also needs attention where manufacturing persons, research persons, export persons, they all have to be there. So it is that these products, when they are becoming where team effort is needed for taking decisions, it is lacking. As a result of that, no importance being given, and these products are not being purchased by the corporate world.
Do you see it changing rapidly in the next 5 to 10 years, or you think, no, it's going to be a slow change?
It will definitely change as India has come out under the Prime Ministership of Prime Minister Modi, that India will take up their export figures to very high numbers. Yes, it is going to happen when we will increase exports. We will switch over from export of agro commodities to processed commodities, processed foods. Product liability cover is required because pharma exports are going to pick up from India, food exports are going to increase from India, cosmetics exports will increase from India, then product liability cover is a must for that to protect the interest of the Indian company. Otherwise, they will be at a grave risk. Any claim lodged against them in the foreign country due to cancer causing ingredients or something, that company will be ruined, not in foreign, even in India.
Absolutely. So that will be the catalyst in a very.
It is going to be the catalyst. India is growing, our GDP is growing, and we have to now come out of those shells where we were habitual of selling the products within a limited market and we were satisfied. Now we are talking of much bigger companies.
Excellent. I think that's a fairly good insight to see what all can make it change. And so let me come back to Vish. Exactly 8 years back, almost to the date, the first biometric mobile phone was announced, right? So, and that probably changed many things, including payments, including identity, KYC, and everything. Even consent. So look at and then of course the iris and face recognition came in, and maybe tomorrow already voice recognition is in. You can buy through that. So there are various different ways of again fitting it with the way people do things and not letting them just print out pieces of ID and sign. This is a revolution. But Along with that, the wearables are coming in, which means massive big data is flowing about people's well-being, their vitals. And many of these are really, really private data. Many of these have got, if you combine, you can actually, even without given the name and location, if you combine the purchase details, credit card transaction details, whatever is picked up from SMSs by many apps, wearables, health, you can pinpoint it almost to the individual. So how do you think that's going to come back and bite the whole technological juggernaut? Do you think there are going to be bumps along the way when regulators and governments are going to come back, and what do you see? I mean, is it going to be one smooth hockey stick up, or you see choppy roads ahead for technologies involving data and human data?
Joydeep, I'm really happy to say we live in a country that's actually very progressive that way. If you look at a lot of the government frameworks that have been created around consent, if you look at the Sahamati framework, if you look at even the National Health Mission and health data and what is accessible to whom, at the center of that data access is the customer. The power is with the customer, with the user, the eventual owner of that data. But I think it's also progressive to really think about how do you take that data and actually put it to good use. Data sitting in a silo that's produced for no use is not useful data, and that doesn't serve anybody's purpose. So I think as the regulation and the government thought process around what is allowed, what is not allowed on the current line of thinking progresses, I think there'll be tremendous opportunities for insurance companies to participate in that data sharing process, build better products for the customer, be in a better position to understand customer preferences, and as a result, be able to weed out inefficiencies, right? So it is only fair that customers pay for what is right by them. So if I'm a very healthy individual and I'm taking care of myself, my price of insurance should be significantly lower than somebody who's irresponsible. That is societally a fair framework to work with. It's just that it's been difficult to identify who are, individuals that are being responsible and who are individuals that are being irresponsible. And so when that change is very big, you have to work with law of large numbers and increase the price for everybody, right? What is possible today is to provide data to algorithms that are able to better sift out the responsible individuals from the irresponsible individuals. And when that happens, whether it's in healthcare, whether it is in life, whether it is in property and casualty, you will get much more customized products. You will get highly affordable products, and you will be in a position as a company to offer a wide spectrum of opportunities for people. And that inclusiveness that comes in, I think will also be very helpful in changing the perception of insurance from being a product that is pushed and people have to sort of, regulatorily buy as a result of legal reasons or regulatory reasons, to one where they truly see this as a partner in living a better life, right? They truly see insurance as a first-class choice that they make in their lives for how they want to live and protect their loved ones and their assets. And we are definitely banking on that. And that's one of the theses inside ACKO, that eventually when we put people at the center of what we do, whether it is their data, whether it's their choices, we will build better products.
Excellent. I think that's a combination of products and services which are aimed at optimum utilization of resources is very, very important, because sooner than later, I think the whole ESG tsunami is going to hit. And ESG not just about environment, or just a net zero of emission. It is not about just socially having any kind of a social activity. It is also about how responsible you are in society, how responsibly you deal with your vendors, employees, customers, their data, and the whole protocol about it. Even today, people are carrying their income statements and all the financial underwriting papers all around, and they're like floating around in envelopes, and things which people who normally not part with are given away for insurance underwriting. So I think that there needs to be a lot of work done there to gain the confidence. And that brings me to my last question, for which I would really want a one sentence answer from both of you, the same question. Today, people are measuring India, the penetration of, and let me speak of non-life, because both of you are especially non-life. So we believe the life part out, but there's a lot of savings element and there's a multiple things. But 100% risk insurance, which is non-life, it is typically measured as a percentage of GDP. Now, personally, I think that's a wrong measure because let's take the case of Mr. Sethi was saying that prices fell, right? When prices fall, but the same asset is, let's say, insured, penetration has not gone down, but the premium has gone down. So premium of as a percentage of GDP is probably a wrong measure. Probably sum insured as a percentage of GDP is a better measure because non-life insurance comes and protects people and their business and their productivity, which is actually our production capability, GDP. And that has grown by 10x from the time of de-tariffing to now. That sum insured growth has been very, very large. But do we see, whichever measure we take, doesn't matter. When we are 2021, by 2025, what do you think, where do you think India will take the penetration to? And I don't want a number. I just want a multiplication factor. Do you think that is in the way the whole non-life industry, which includes health, will grow? So maybe Vish first, and I'll have Mr. Sethi have the last word.
Yeah, it's really hard to predict future, but it's easy to hope what will happen.
Let's predict. Doesn't matter. Nobody's going to hold.
I can sort of extrapolate from what we are seeing. We're definitely seeing very high double-digit growth in everything that we see in terms of consumer behavior, right? Whether it is the property casualty business that we are in, or in the health sector, where I think we're seeing a lot more responsible behavior from employers in offering basic plans at the minimum and then allowing for customizations. And so when choice is happening, when the right products are getting built, and when we are able to sort of, like I said, truly put the user at the center of everything that we do, there is no reason to believe that we will not, be doubling every 3 years. So I think that's our sort of very conservative view of things. Now, if you can do some things really, really well, you can go a lot faster.
Excellent. Mr. Sethi, what do you think? What is the multiplication factor you will put to next 5 years of growth?
In next 5 years, I foresee that 100 will become 250.
Excellent. So so I think that's more or less in line with what Vish said. He's saying 3 years doubling, which means like that. So excellent.
So see, one can say that what can be the reasons? You should have asked this. See, the greatest person who has given a push to insurance in this country is the Prime Minister.
So, Mr. Sethi, I wish we had time.
Jeevan Jyoti and Suraksha and all, and now that our Pradhan Mantri household home insurance is coming, which will be announced in the coming weeks or coming months, where all the houses in this country will be insured. That will be a big push.
Look forward to houses being insured, because I remember in the Bhuj earthquake, what people had to go through, because India, we don't have much of insured losses. So I wish we had more time to get into depth of this, but we are on time. So let's conclude the session. I'd just like to say that it's been a very, very enriching session. We have had, we end on a very optimistic note of growth, powered by technology, adoption of technology, change of attitudes, driven by both insurers and customers, and of course the whole, taking care of customers and consumers, because they are always wanting to, want things to be always better and cheaper, irrespective of the way we deliver it. Thank you very much, and over to you, Ivan.
Thanks, Joydeep. We couldn't have had two better individuals, one young, one not so old, in Mr. S.K.Sethi and Vishwanath Ramarao, giving us their perspectives on building for the new normal when it comes to InsurTech. Excellent insights, very, very, very sharp, cutting-edge insights. And all thanks to you, Joydeep, for the questions that you posed to the members of this Trialogue. Thank you so much for doing a wonderful job of moderating this Trialogue, Joydeep, as usual, with a smile on your face and just the right dose of charisma that you always possess. It's a pleasure having you. Thank you, gentlemen, and we wish you and your respective organizations the very best going forward.
Thanks, Ivan.
Fantastic.
You're most welcome.
Thank you.
Do stay tuned in, ladies and gentlemen. We will be back on the other side in a couple of minutes with the last session, which is the closing keynote.